Friends, greetings to you all. Yesterday we concluded that there aren't enough reasons to close the long position yet. Less than a day has passed since then. The market has already provided new data, and today we're interested in only one question. Have any arguments appeared that would make me change yesterday's decision? If so, I'll show them in this review. If not, then we continue to stick to the previous plan. Let's check this step by step. So as usual, let's start with the limit metrics. It was precisely these that gave us the entry point for the long position a few days ago. The first thing that immediately catches the eye is that we've already exited the buyer's zone. Notice that here we were in the buyer's zone and now we've exited it. And this means that I definitely would not open new long positions at the current prices. You needed to buy when the market was in the buyer's zone, like it was here or like it was here, but not when the market has already exited the buyer's zone and is heading toward the seller's zone. This is exactly what I talked about in previous reviews. But here it's very important to distinguish between two different things. Being late to open a new long does not mean it's time to close an already open one. So right now we're only interested in one question. Are there any reasons to exit the position? Let's take a look. Now let's open the metrics that show us the seller's zones and their intentions. For this, I've opened this preset, and here the situation looks much more interesting than it did yesterday. Last time, it was precisely in this area, which I'm marking on the chart now, that the limit seller started to act, but now prices are already above the previous seller's zone. And at the same time, we don't see him appearing on the chart. He's not there. The limit seller is not active right now, but prices have been pushed lower. Well, on Bitcoin, for example, it's not very noticeable how this metric worked in the seller's zone. The correction was only 3%. But if we open any altcoin, we'll see that the movement is quite significant. Let's take the Near coin as an example. We entered the seller's zone at this point, and after that, the correction on the coin was 10%. Now the prices are already returning to that range. We haven't entered the seller's zone. Let's switch back to Bitcoin. We can already, so to speak, understand and come to a local conclusion, at least within the framework of the first metric, that firstly, because the price is significantly higher than the previous seller's zone, which was here, and prices are much higher, but we still don't see the seller, and the lines that previously indicated the start of downward pressure have not appeared in this area. This is currently the strongest argument in favor of maintaining the upward structure. Moreover, if we look at the buyer zones, we can see that the new buyer zone that has formed and where we considered a long position in previous reviews also appeared at higher prices than the previous buyer zone. In other words, the layer has not been updated, and before that we had another buyer zone again, and we also have a clearly upward structure in which it is evident that the limit buyer is moving their limit orders higher and higher, thereby pushing prices up. This is a clear sign of an upward structure. Therefore, this may indicate that a large buyer continues to move their limit orders higher and higher. As long as this is happening, I see no reason to talk about a full reversal. The first check is complete. According to the limit order metrics, there is no reason to close the long position yet, but that's not enough. Let's see if the other data confirms this. For this, I will now look at a metric on Bitcoin called DIFF, which shows the difference between limit buy and sell orders at a depth of 8%. Historically, when the buyer entered the red zone after some time, the market really did start to correct. For example, the last situation like this occurred in this range. This happened, for instance, on July 6th. Yes, that's what I just pointed out. After that, Bitcoin dropped by about 3%. Yes, that's not much, but we're also looking at the 15-minute time frame, so within that time frame, it's a normal move. Now let's see where we are today. We are currently in this range, which means we still have room to move higher, and we haven't reached the area where Bitcoin was sold in the past. Next, what should we pay attention to? The price is already significantly above the levels where Bitcoin was previously distributed locally. But at the same time, we see that there is no pressure from sellers. We are somewhere in the middle of the channel, between the super anomalous buyer zone and just the market balance. We are in the middle, but at the same time prices are already higher. And of course, this is a positive sign, indicating that the limit seller is moving their orders higher and higher, which means there is still room for further growth. The metric itself has not yet reached the danger zone, and this is important to understand clearly. If we look only at the limit order data, I also don't see any reason to change yesterday's decision yet. But this is exactly where the good news ends, because next come the metrics that, for the first time today, made me become more cautious. Now let's move on to margin loans. This is where the first questions start to arise today. Up until this point, all the limit order metrics supported yesterday's hypothesis. But the market doesn't consist only of limit orders, so now it's important to understand what margin traders themselves are doing. Let's take a look. Over the past 24 hours, the volume of margin loans has indeed increased. we can see that it has reached $146 million and there is clearly some upward trend, yes. In other words, the volume of margin loans is growing and margin traders take out USDT loans in order to buy coins, in other words, to go long. This is quite logical. After such an upward move, more and more participants start opening new long positions because people like to buy when the price is rising. But it's important to understand how dangerous this growth has already become. Historically, after carefully studying the history of this metric, I determined that when the level reaches about $250 million, why about? Because right now, for example, I'll mark 268, but I think even that will be enough. 250 is the average value. When the amount of loans per day reaches this zone, we observe a correction. That was the case here as well. The scariest thing is when this happens during a decline, when margin traders start thinking that prices won't go any lower and start buying, but the market gets pushed down even harder. But the very fact that we're already not that far from this level, there's about $100 million left for margin traders to accumulate in a day, after which most likely prices will start to fall. But for now, we're only moving in that direction, and it's still significantly higher than it was a few days ago, so there's still a considerable distance to the critical zone. Therefore, it's too early to conclude that a reversal is imminent. For me, this metric indicates something else. I wouldn't open new longs at the current prices anymore, but at the same time, it doesn't yet give a reason to prematurely close an already opened long position. The second check also didn't change my decision. However, the next metric already looks significantly more interesting. Now let's look at the ratio of long to short accounts across all margin loans. This is where today we see the first signal that I already don't like. The number of longs continues to increase, as you can see. Currently, across all margin pairs, there are 170% more longs than shorts. And if you look at the history of this metric, you can notice one pattern. Before many local corrections, the market looked similar. Well, for example, here's the range from June 2nd. The same long-short account ratio was observed as it is now. Before that, without reaching these values, we went into a correction earlier, after the long-short account ratio had grown quite strongly and quickly. A similar situation occurred in this range as well. Right now, the metric is even more overheated than before previous corrections, while prices are lower. And we saw a fairly significant downward movement when the ratio was higher than it is now, and this led to quite serious consequences for those who were holding longs. This does not necessarily mean that the decline will start today. This needs to be clearly understood. But it is precisely here that, for the first time, there is a reason to become more cautious. This is very important. This metric did not make me change my decision. It made me change my attitude toward the risk I currently have in the trade. The difference is fundamental. I continue to hold my long, but the desire to increase the position has almost disappeared. That is why I am especially interested now to look at the next group of metrics. If they confirm this signal, the situation will really change. Now let's open the funding metric. Here, I am interested in only one question. Does the futures market confirm what we have just seen? If yes, then caution should be even greater. If not, then it is still too early to draw any serious conclusions. Let's see. As of today, funding remains fairly calm. Only about 10% of coins are shorted and just 5% are longed. Yes, the sentiment among participants is gradually becoming more optimistic. We can see this from the funding rates. The market no longer wants to short as it did before. For example, in this range, or during certain previous periods when the number of shorts on the market reached 50%, as it did in February. And we do not see the levels that have historically accompanied serious corrections. The market has not reached them. In other words, the futures market does not yet confirm overheating. So right now we have an interesting situation. Limit order metrics continue to support buyers. Funding also does not show any extreme values, and only the long-short ratio is starting to warn that the market is moving toward a possible overheating, at least from the side of margin traders, who will inevitably be shaken out. The third check also did not provide grounds to change the main hypothesis, but it was after this check that I started to watch the market much more closely. Now all that's left is to gather all the metrics together, and only after that make a final decision. Now let's pause for a moment and look at the market as a whole. We have checked all the main metrics. Now there is only one question. Did they change my decision from yesterday? Let's briefly sum up. Limit orders are still on the buyer's side because we still haven't reached the seller's zone. This is what we talked about at the very beginning, but at the same time, prices are already higher than the previous seller's zone. That's the first conclusion we've made. Next, a new buyer's zone has once again formed above the previous one, just like it did here, and the low was not updated. This indicates that market makers and algorithms are moving their limit orders to higher and higher prices, thereby pushing prices up. Next, the DIFF metric on Bitcoin does not yet show any signs of overheating. We haven't reached those levels from which corrections previously started, even though prices are already higher. This also tells us that there is no reason to close longs right now. Margin loans. Margin loans have indeed increased $146 million, but not to the levels from which full-fledged market reversals begin. And there is still room for this metric to grow. Funding also does not indicate overheating. And the only metric that made me become more cautious is the one that shows us the ratio of long to short accounts across all available Binance margin pairs. This is MLSP. It is there that the first signs appear, showing that participants are starting to look too confidently towards longs. But the problem is that so far this signal is occurring only once. I never make decisions based solely on a single metric. For me, it's important that several independent data sources simultaneously start indicating the same thing. At the moment, that's not the case. So, to answer the main question of today's review, has my decision changed over the past day? The answer is no. I am still holding the long position that we opened a few days ago, but there is one change. If yesterday I was still considering increasing the position, today I no longer want to do that. Why? Because the market is gradually becoming less straightforward. The first signs of overheating are appearing, as we can already see on the MLSP metric, but they are not yet confirmed by the entire system of metrics, which means I also have no reason to completely change my plan. I'm holding the long position, not making any new purchases, and not considering a short from the current levels. Sometimes the best decision is to change nothing until new data appears. In my opinion, that's exactly the situation we're in right now. So what needs to happen for me to close the long position? The answer is very simple. It's not about one particular metric supposedly turning bad, or even two. I need to see several independent metrics start to confirm each other. Limit orders will indicate the appearance of a seller. For example, there will be a crossover here, just like it happened in this range. Funding will show overheating. The number of long-short accounts will reach an extreme and set records. Margin loans will approach $250 million per day, not 146 as they are now. That's when I'll have grounds to change my decision. But today that picture isn't there yet, and that's exactly why I continue to stick to my previous plan. Let's sum up. Over the past day, the market has indeed changed, but not enough to abandon my main hypothesis. Yes, there is more caution now. Yes, the first signals have appeared, which I no longer want to ignore, but there is still no full confirmation of a reversal, so my plan remains the same. I'm holding my long position, but I'm not opening any new positions for now. I'm also not considering any short trades. Now we just have to wait for the next trading session, because that's when we'll see whether today's signals remain isolated or if other metrics will start to join them. That's exactly what we'll check in the next review. Thank you for exploring the market with me. See you tomorrow. And if you're interested in what I'm talking about, subscribe to this YouTube channel. Here you can make money and head over to my Telegram. There, you'll get a more detailed introduction to the Trading Platform Pro service. That's all from me for now. Thank you all. Goodbye, everyone.